Hey everybody, it's now November. We've got the October real estate stats available, and I just had a chance to kind of go over some of the data, see kind of where we landed. We'll go over some of that today, as well as some kind of outlook into the coming months here. So right off the hop, actually, October was a better than anticipated month. We did see number of sales actually ticked up, which caused months of inventory to drop below the five mark we'd seen in the past. Now, this could still drop a little bit, but we'll talk a bit about that deeper here in a minute. This is encouraging to see sales to new listing ratio increase pretty significantly there month over month. Again, this still needs to be greater for it to be a real true sign of things going back to the sunny days of selling, or at least selling when you're a seller anyway. And all this said and done, all of this optimistic stuff here still led to the average price falling, which is kind of what I was anticipating month over month. So let's take a look at what that looks like on the charts. Okay, so we're looking at new listings. New listings did fall month over month, which is very normal. It's pretty normal this time of year. We see new listings and sales taper off. Okay, so September very high compared to past Septembers. Usually when you see like the peaks is in spring, and then you'll see this little bump. The little bumps usually fall. Okay, so if I go over here, September, and then it starts dropping. I go over here, September, dropping. September, dropping. Okay, so here's our September. What do you guys think is going to happen next? I mean, maybe it's going to be a different kind of year, but I would anticipate that we're going to start seeing the drop here. Okay, same thing with the sales activity. Okay, so again, it's always repetitive, right? And it's a pretty predictable chart here. With the exception of these past 3 years, very similar volumes, and now you've seen this downward trajectory, right? So again, sales activities peaked. It's actually crazy. The difference between spring this year and October isn't that drastic. Usually it's quite a spread. But anyway, so it did tick up quite significantly month over month. I don't see this number holding up in November, December, January. It just does not seem possible to me, but who knows? Maybe we will defy literally a decade worth of trend and break through here somehow. But I would expect that this number is going to start rounding off as well as we head towards December, and we'll see. Same thing with the sales to new listing ratio there. Again, peaked up, which is a good sign, but we're still well below, not well below, but we're still below that 50% threshold, well below the 75% threshold. And again, until we get above 75% at least, it's not really a sign that we've got like a robust market out there. There's your months of inventory. You can see this pattern's kind of repeated itself a few times already. So we're on this downward trend. Keep in mind, months of inventory is simply the amount of total listings divided by the number of sales on that month. So if sales spike and the total listings remain the same or close to the same, active listings, so it's not much difference between active listings here month over month. However, the sales activity peaked up, which causes months of inventory to drop. Okay. It's not impossible we're going to see the months of inventory continue to drop a little bit here, mostly because I think the new listings will slow down, but we'll see. What else do we got here for you guys? The supply, actually. Let's take another look at that chart. Active listings. Like, this is obviously a clear outlier of data compared to what's typical, right? Like, this is a huge increase in supply. Doesn't make sense to me that prices are going to go up. Really doesn't. I mean, again, 623, last low 585. I don't think it's impossible we break through here, and not just because of the inventory, but because of the interest rates. And yes, we saw the Bank of Canada cut interest rates on the overnight interest rates, which are tied to variable rate mortgage primarily, right? Yes, it may influence fixed rates, but not to the extent that bond yields will influence fixed rates, okay? The last 24 hours or so, the yields are coming down a bit, but they have been rising since kind of early September. Okay, so this is the US 10-year Treasury, which is, again, on that decline. These charts are going to be very similar between the US 10-year and the Canadian 5-year. Okay, very similar. You can see the 5 years dipping back down again, but again, it's still kind of an upward trajectory trend since September. Okay, the higher the bond yields, the higher the fixed rates. That's just what it is, right? I'm sure you guys have probably seen some mortgage broker out there somewhere saying, oh, fixed rates are going up this week, even though like last week or week two weeks ago, we saw the rate cut, right? It seems confusing, but it's not once you have a clear understanding of how things work, okay? So let's take a quick look at what this all means. Let's incorporate some AI into this, okay? Let's ask ChatGPT. Oh no, my session expired. What does a 10-year treasury mean for Canada? Let me log in quickly here so that it lets me, there we go. Oh man, sorry, technical difficulties. Come on now. What does a rising 10-year treasury bond mean for Canada? All right, let you guys quickly just let's just quickly read the bullets here. So influence on Canadian bond yields. Yeah, that makes sense. Interest rates and monetary policy. Yeah. Okay. Canadian dollar impact. Yep. Housing and mortgage rents. Yep. Investment and stock market impact. Okay. So bond yields go up, interest rates go up. It also impacts the Canadian dollar, which I'm not sure if anybody's been paying attention to that. But I mean, it's not doing great either. It's not exactly the worst it's ever been, but again, it's definitely a downward trend. Okay, lower highs, lower lows. Now let's quickly touch base on the election results, simply because it does impact Canada. And let me be clear, regardless of what the result was, it would have impacted Canada negatively, no matter what. Okay. The reason that it's going to impact Canada negatively right now probably isn't what a lot of people think it is, but the main reason is, at least it's my belief, America is about to do very well economically, which might come at the cost of other countries, sure. That's not their problem. Hate to say it, but it's not. They're going to move forward with an America First policy, which is very likely going to drive their economy through the roof, and we are already left behind in the dust compared to the US economy right now. As soon as this starts taking off, unless something changes here, of course, we are just going to continue to be left behind at an exponential rate, which again will impact bond yields, US dollar currency ratings, value, that kind of thing. So it's going to be trying on the economy in Canada here, but it is what it is. Again, it's better to kind of know these things and be prepared for them. That way you don't run into the shock factor, but we'll see what happens, right? Nobody really knows for sure, but just from a data standpoint, this is kind of what I see coming here, okay? I think I've gone over all of the key points. Let's quickly dive on some predictions for November, okay? So a couple of things quickly. I think we're going to see sales fall below 600 in November. It's very rare we see sales activity greater in November than in October, okay? Like again, almost any October you go to on this chart, November is going to fall. I'm not looking at COVID year, of course. October, November, right? I mean, it literally every year. Why would we continue to go up here? It just simply doesn't make sense to me. Again, who knows? Maybe we'll kick the trend. I don't see it happening. So I think we'll see sales fall slightly, at least below the 600 mark. We'll also see listings fall. Same idea on the new listings chart. If you look at this chart, I mean, we're already on seasonally high over here to begin with, but all of these typically fall towards the end of the year. Okay, so I wouldn't be surprised if we see new listings down about 25% from October, right? Let me just double count that calculation here before I get ahead of myself. 1388 times 0.75, 1041. What did we have in the October before? Yeah, I mean 900 last year, year before that, under 900. I mean, again, I understand people are listing right now, a lot of them out of necessity, not because they want to, but I do think we're going to see this number come in lower, probably closer to the 1,000 mark, maybe a bit higher, maybe 1,100, but that's kind of what I'm anticipating. So listings down roughly 25%, sales below 600. Months of inventory may continue to climb because of the lack of, like, there's going to be a bigger decline in inventory, new inventory, than there's going to be a decline in demand. So it's possible we see months of inventory tick down a little bit as well. However, I do think the average price will continue to tick down, even if ever so slightly, like even if it's just below the 620 mark. I do expect it's not going to increase. Of course, barring any kind of major outlier, like maybe a $3 million home sells somewhere in the city, and that's obviously going to spike the averages to some extent. But barring anything like that, I would anticipate kind of a slow mellow out for the rest of the year, maybe a little up and down here and there, but we'll see. Anyway, guys, that's my thoughts and predictions. If you have any questions, concerns, or if there's anything more that I can do to help out, just let me know. All right, take care.